Hi, I'm Bert Nussbaumer from macrobeat.co.uk. Well, we had an interesting week, would be probably an understatement. And as so often, we're looking one way, which was obviously the Fed minutes on Wednesday, and things just happen completely from a different direction. As of Tuesday, we've seen a rather surprising risk-off move with equities lower, risk selling off in effect, strong rally in the bond market. So a real sort of weird move that didn't really sort of see a immediate trigger as such. And I think this is the sort of moments when you just sort of start to realize that maybe we have accumulated a lot of news over the last few weeks, things that we may have sort of ignored. And then you just really need one or two things that fall into place to really be the straw that breaks the camel's back. Personally, I think we had a weak Chinese PMIs. Early this week, we have this whole story of tech clampdown in China. We have this sort of US listing of US Chinese firms, all these kind of things. And sadly also that COVID is seems to be back in the headlines with rising numbers across Asia. We see Asian equities under pressure as well. And I think it's just these sort of early wobbles and early worries whether or not the recovery is at risk if all these things sort of come back together. Just as I was about to come on air, we had the 50 basis points RRR cut from the PBOC. That was obviously also being rumored early in the week and probably may have surprised people quite a bit. I don't think people were aware that China is kind of, slowing down somewhat, and that sort of resulted to the rate cut. While, in the Western world, we start to talk about taper. So there is quite some nerves out there right now. It's probably too early to say whether this is going to see a follow through, but I respect moves that happen that do not come from very obvious headlines, which means there's a deeper rooted problem out there. I have a few charts for you just to sort of show what we just sort of talked about. The first one, euro dollar, obviously still dollar bid post the more hawkish Fed meeting. The sort of very mixed and balanced Fed minutes didn't really cause any attention because the market was obviously, as we said, busy with the risk off that we've seen this week. We held the 117.70 area. As long as we sort of hold there, we may sort of consolidate a little bit. Don't think we go back above 119.45. And I would expect the euro to continue lower in the next few weeks. On the next chart, this is dollar yen. This is just to show for the first time in a while the risk off move actually gone back to the old DNA, and we see a strong push lower in dollar yen. We held the sort of critical 109.60 area. As long as we manage to do that, maybe things can again slow down for a little bit just to sort of breathe and see what's actually really happening. The next chart, this is Aussie yen, obviously the same thing. The move as such doesn't look that big, but if you look at the chart, the sort of big rally we had from the sort of March 2020 lows when we got all the QE and all the stimulus and what so on, we start to sort of crack some of these sort of pivots. We've been very stable in the last few months or most of this year, and I would think we start to sort of leak, and there's a real risk that we might really see a bigger correction coming in risk effects, also in equities. The next chart, this is dollar rand. I could pick any sort of dollar EM. Again, this is more to sort of show where we are in terms of reflation trade or risk on move. We've broken out of the down channel. We haven't yet quite hit the accelerators, which is sort of between 1440 and 1450. If that area will break, I think a stronger upside would come and we would see a bigger shakeout of more reflation trades or risk on positions, whatever you want to call it. The next chart, we have the Dow. Yes, in a bigger picture, not much has happened in the last few days, but we had a little sort of teaser yesterday with a break below the mid-daily Bollinger Band, below the sort of 34,257 level, the sort of first new all-time high we had in April. I would say a break of the mid-Bollinger Band, which is at 34,281, and a close below would be the first real sign that something new is happening. I personally still expect a sort of, maybe a 10% type correction in equities. I also expect a sort of 5% correction in risk effects. But the next sort of few days might show whether this was all a one-day wonder or one-week wonder, or if this is something new. Thank you very much indeed.